What's up guys, welcome to another video. So in today's video, I wanted to show you how I draw my supply and demand levels, okay, how to draw them correctly. So there are four scenarios first that I need you to understand very clearly and be able to label these supply and demand levels according to these 4 points. So we have a couple of continuation zones and we have two reversal zones, right? The first continuation would be a rally base. Rally, this is basically just an uptrend when price goes up, makes a little base, and then another rally, right? And that base will be a continuation. Then a reversal would be basically a rally base drop, which would be if price goes up and then makes a little base and then drops. Okay, that's a reversal trade. And then a continuation trade for the downside is a drop base drop. Price goes down, makes a little base, goes down again. And then another reversal is obviously the drop, and then a base at the bottom, and then a rally. Okay, so these four are very important, and whenever you draw a supply or demand level, it needs to be one of these four, and you need to be able to label them. So before I actually show you how to draw them, we need a couple of criteria in order to validate a zone before we actually draw the level. Okay, so the first point will be we need to see a break of structure. We need to see highs and lows being broken, and the more they are, the stronger the level is. Okay, second point is there needs to be consolidation before the actual move happens. So I usually look at this on a smaller time frame, like on the M1, for example, or the M5. Before, let's say we have a drop, then a base, and then a rally, this reversal zone. At the bottom, the base, there needs to be a lot of consolidation, right? We cannot just see a spike down and a spike up, even on the 1 minute, right? There needs to be a lot of consolidation before the actual move happens, because that means then there's a lot of volume in this area. Third point is we need to actually see follow through. So sometimes you will see just one high being broken, you will see continuation, but you will just see one candle or two candles going up. We really need to see a lot of follow through. We need to see a decent move. Okay. Point number four, ideally a fresh level. Obviously, used levels can work too, and I really like to trade used levels, which obviously are basically support. But ideally, it should be a fresh level. Point number five is the candle that actually makes the demand or the supply has to be an engulf candle. Okay, we cannot have any other type than an engulf. It needs to close beyond the previous candles, at least closure of the candle. Okay, and if it closes beyond the wick, then it's even better. It's even stronger. We really need to see an impulse after we have the consolidation, or we need to see a strong aggressive impulse where it really shows that buyers or sellers are stepping in aggressively. And how to draw these levels is basically we draw it on the engulfed candle. Okay, so the candle right before the engulf, that engulfed candle, we draw it from the open till the wick, either the high or the low, depending if it's a supply or a demand. So let's go to the charts now and look at some examples. So here, for example, we are obviously on the H1 time frame, and we're just looking, right? Where are the impulses? Where are the engulfed candles? Did it break highs? Did it break lows? Is there consolidation on a lower time frame? This is really what we need to see. Okay, so here, for example, we have a demand right here, which is on the H1. And yes, there is sort of an impulse. Obviously, this is the H1 time frame, so like an M15 or M30, it will be a bigger move up. It is made from a engulf, which is good. It is a fresh level up until this point where price touched it and then reacted from it and then touched it again yesterday and had a massive reaction from that area. Now we need to see if there is consolidation on a smaller time frame, such as the M1. And as you can see right here, look at this consolidation. Price goes up, then ranges, consolidation, and then price goes further up. And as you can see right here, how it reacted beautifully. It just wicked into it. Nice reaction up, came towards it again, missed it by a tick, and then flew from there again. But then the next day, it comes back down again, sweeps these lows from the day prior, and then a massive rally started from there. Okay, so we can clearly see that this is a good level. And as you can see how I drew it, is basically again the engulfed candle, right, from the open of this candle till the wick low. And if the wick is shorter than the actual engulfed candle, well, you just draw the whole area and you use the wick of the engulfed candle. Okay, so this would be a valid zone. Now, for example, we see this, let me just remove this, we see this big aggressive move to the downside. Okay, clearly there were a lot of sellers there. Now we can go on bigger time frames and see if we see an engulf candle, and as you can see here, there's an engulf candle, but I don't really like that there wasn't any continuation on the H4. It was just one candle. Okay, so we will just mark this, and we will see on a smaller time frame if there is any supply zone with more continuation to the downside. Okay, so let's go down on the H3, still just an engulf, one candle only. H2, you can see again just only two candles, not really much continuation, but you can clearly see there's already on the H2 consolidation before the actual move down. Let's go even further. The H1, not an engulf. M45, we do have an engulf right here, which is already better. Okay, so we can clearly see this is a massive engulf, but only again two candles down, so not too much continuation. Obviously this candle was massive. Let's take a look further down. M30, no engulf. M15, there we go. Okay, so on the M15 you can clearly see there was consolidation. Even on the M15 there were 1, 2, 3 candles basically just ranging, and then a massive drop of 1, 2, 3, 4, 5 massive bearish candles right to the downside. So now that we have established to draw this level properly, as it's made of an engulf, there is, you know, momentum to the downside. It's followed through. It broke previous lows. We just need to see on the M1 consolidation before the actual move down happens. Let's see. Look at that, guys. Look how clean this is. Okay, you can clearly see this is a rally, a base, and a drop. Okay, this is a reversal level. Look how much the buyers and sellers were fighting where to push price, and it looks like the sellers won, and they had just bigger orders, and they were able to push the price down heavily. Okay, so this would be how I validate and draw supply and demand levels. But now let's look for a couple more examples, and let's take a look maybe on a bigger one, bigger time frame. Here, for example, we can see on the H4, yeah, we have a rally, a base, and a rally. You can see this candle is an engulf. Okay, so the proper way to draw this zone is from the open of that candle to the low. Change the color to demand. As you can see how price beautifully reacted from this level. Okay, now there is follow through. As you can see, massive run happened from here. Now we just need to look like on a smaller time frame, maybe the M5, maybe the M1. If there is consolidation before the actual move happened, as you can clearly see, we had a rally, then a base, right? Price didn't go anywhere, just consolidating a lot, and then a massive rally. So this whole area here is valid. Okay, let's look for another example, maybe a supply. Let's see if we can find something, maybe even on a smaller time frame. Let me just remove this, keep it clean. All right, let's do one more example before I wrap this up. Not really much selling, to be honest. More examples on the buy side. Well, here, for example, we have this level right here. Let's change it to supply. We have this level right here. Okay, so this is made of an engulf. There is follow through. There are multiple lows being broken. So if you look like on a smaller time frame, we need to see if there's actually some consolidation. And as you can see right here, there was consolidation here. You can even make the zone a bit bigger if you like this, and include the whole consolidation. This is just, you'll see this with experience when there's a lot of consolidation. Sometimes you can adjust the zone and draw it not just from the open to the wick, but you can also include sometimes maybe a bit, maybe even make it a bit bigger or a bit smaller, depending on how the consolidation looks. Okay, and there's this one tool that I use, which is the range volume profile, okay, to further validate my supply and demand levels. So I would use that to see where most volume is, and then I would adjust the zones according to this volume. But I'll make a whole other separate video on that because it's actually very powerful. Okay, so anyways, guys, I hope this makes it clear how to draw and validate supply and demand levels. Hope you guys enjoyed it. If you did, please leave a like, and let me know in the comments down below if you have any questions. All right. So thank you for watching, and we'll see you in the next one.